Hey traders, it's Victoria from TRADEPRO Academy, and in today's video I'm going to be breaking down the ultimate guide in creating a day-to-day trading plan for futures and for any other asset realistically. I'm going to show you guys how I use auctions and order flow to create a day-to-day trading plan that allows me to have some kind of bias in the markets, but be very malleable. So if you guys are excited about this video, I'm going to guide you through all the steps that I go through every single morning to break this down in a routine and rule-based fashion to get a better understanding of where the market is, where it's headed, and what the probabilities of it going up or down are. So if you guys are excited about this video, I'll see you guys right after this intro. Don't forget to hit that subscribe button and drop a like down below.
So, hello everyone. Today what we're going to be doing is breaking down the full creation of a daily trade plan and understanding imbalance levels and the areas from past market participation that has a very, very big influence on how we view markets and the market movement. So these techniques, they're going to be useful in any futures market, realistically, any type of market that has the ability to look at different volume analysis and auction market theory. And if we're taking a look at the S&P 500, right, we might squeeze in some NASDAQ, but it's the same principles for the two of them. So first and foremost, I want to break down what the daily plan is. Every single morning, I put in a trade plan in our Discord, and we talk about it in the live room as well. Generally speaking, it's what we can call a roadmap, right, for the day. It's a bird's eye view of the market, so we can see everything as is and understand it from that context. So it's not necessarily the creation of bias. I don't want to kind of just like dig myself into a hole where I'm positioned only for downside or only for upside, right? It's the understanding of how market participants have actually entered the market to create balances and imbalances. So using volume to guide us, since volume guides price. Now we can understand where market imbalances are created, and market imbalances are what move prices. The simple theory of markets that go up or down is based on the understanding that if the market goes up, generally speaking, you have more buyers than sellers, right? If the market's going down, you have more selling than buying. So when we understand that, this is what I'm talking about in terms of market imbalances. The imbalance is heavier buyers versus heavier sellers. So if we can pinpoint those and understand where those are, then we can create a pretty strong roadmap for the day when it comes to trading. So what I'm mainly going to do here is run around the concept of creating a trade plan based on the understanding of the identification of large participants that have created imbalances for us to play off of. And this not only allows us to find levels, but it also allows us to find market directionality. So next thing, right? What goes into a plan? The good thing is, if you show up at any point of the session, realistically, you can use the tools that we're going to be talking about in your roadmap to navigate you throughout the day and understand what's going on. Now, naturally, I'd like to do it before the market opens. This works on either session, the overnight or the daily session. And looking at the market, I want to identify what's going on from a market participant standpoint, meaning where are the large reactive sellers and buyers that have created some kind of upside or downside movement? This is what's displayed on the volume profile as well as the use of auction market theory. So with a volume profile, I can understand distributions at auctions where there is price balance and imbalance. So on the left-hand side here, what we have is the delta profile, and on the right hand, what we have is the actual market profile. So what I'm going to be doing actually is, on the right-hand side, what we have mainly here that I put on the screen is the volume profile. So what I'm mainly going to be doing is starting off with this chart in itself, and we're going to be breaking down and playing along with this chart. So first, I want to talk about market participants, right? Market participants dictate price movement, generally speaking, right? And not every market participant, what we generally call strong-handed market participants, right? These strong-handed market participants, they don't create moves from the bulk of volume. They create moves from ledges where volume drops off so they can control movement. And that principle is what we're going to take to understand where markets are in balance. So before we start talking about these decisive levels that were created, right, the levels that we want to abide by, I'm going to start breaking down the idea of the creation of the trade plan on a day-to-day basis. So what I'm going to be using, mainly this chart, this is what's going to be a large focus of what we're looking at here. And then the delta profile chart. Now, what this chart uses here, there are three things that we're going to dive into that help us understand these daily trade plans. Number one, right, is going to be the cumulative volume profile here on the right-hand side. This is a 100-day profile, this grayed out profile. Number two is going to be the individual session by session. And as you might have noted, the darker blue background is the RTH, or the regular trading hour session, right? And then the lighter background is the ETH, or the extended trading hour session. So since we mainly trade the RTH, right, some people in different time zones might be trading the ETH, but since we mainly trade the RTH in the live room, what we're going to be looking at is how this might be influenced by the prior ETH. And if there's other volume that sticks out, that's great. And then the third chart we're going to be using is going to be this delta chart that helps us to really pinpoint where the imbalances are. Again, it's divided as such that the day sessions are the darker background blue, the lighter background grayish blue is going to be the ETH. So we're going to use all this information, talk about these imbalances, how they can dictate price movement and areas to trade on. So when we create a trade plan, what we want to understand is, where is price, right? Where is price in terms of distribution? Now, distributions are what we call balanced area. A distribution is generally known as like a normal distribution that has the majority of the data points in the first standard deviation, right? But we're just using that principle of concept to understand where balances are. So the first thing that we're going to do is understand where these balances are in terms of the larger volume profile, the 100-day cumulative profile. And what I'm going to be doing is I'm just going to be breaking down the general construct of where we have the biggest drop-offs in volume, right? These are the biggest drop-offs in volume that we see, and what's inside is what we call a balance. So without going too far into the weeds, right, I just want to create the ones that are currently close to price. And the thing is, with the S&P 500, I'm going to be looking for a balance that's like at least 20 points wide realistically. So I don't have to have like multiple little balances, and I don't have to have like billions of levels realistically. Because what happens in a balance, what shapes up in a market balance, is that there's going to be a very thick bulk of volume, right? This is typically a range. It's what we know as a range. It's a sideways range. It's an area of balance. When prices trade within this area, it creates the accumulation of volume as is. And when they accumulate that much heavy volume, realistically, prices want to stay in this balance. There's a concept of prices remaining in balance, wanting to stay in balance, or moving outside of balance, wanting to remain outside of that balance. So the first thing I'm going to do to create my trade plan is I'm going to understand where these larger balances are, right? And with that, I can understand if price is inside or outside of the balance. So if price is inside of the balance, right, I want to understand as to where did price come from. So if price is able to break down into the balance from a higher area, that generally tells us that you have very, very heavy selling going on in the market if we're able to penetrate an area of such heavy volume. Now, this would require for prices to open and close within that balance. So if the prior session closes and the overnight session closes within the balance, there's typically going to be an understanding that we're going to remain in that balance. Prices that are in balance want to remain in balance. Meaning if I come from an area that's above, right, I'm going to be looking for sell pressure at the top of these balanced areas, because that's most likely what's going to continue this trend move to the downside. And eventually, right, there could be situations where prices actually move outside of the balance. So if prices move outside of the balance, there's the understanding that price wants to remain outside of that balance unless it moves on the overnight session back within that balance, meaning that realistically, we've now done the opposite of what's happening here, and I'll be looking for that long side. So it helps me understand direction very, very well. Now, not only are the ledges within balances key support resistance areas, but so are the ledges to start other balances. Because think of it this way. We've moved below this larger balance, and we're trying to enter an even lower balance that has a lot of heavy volume. Now, it's going to take a lot of selling for price to do something of the sort. And if that happens, great, there's downside pressure. But the immediate response is most likely to try and push prices back higher. So when I understand these concepts and understand how these general larger balances work, I can ask myself, like today, for example, what has price done so far to lead me to believe that there is XYZ type of direction, and where are the areas that I want to trade? So a trade plan involves the understanding of levels and areas we want to trade, because all we're doing with this trade plan is trying to break down where we're going to trade and what kind of position we're going to be taking, longs or shorts. So let's take a look at this. At some point, right, we fake out of this balance to the downside. Great. We fail to accept into this balance, and then we close the overnight session in this balance, leading us to believe that there could be some kind of continuation towards the top of this balance. And then we have this overnight session, yesterday's overnight, which closed right at that balance area, prompting me to look for longs at the bottom of that balance. Today's overnight session, right, we closed back within the balance, and realistically, I'm going to be looking for longs to continue the trend, or we can see if there's any failure at the top of the balance. Now, if we want to have more areas to kind of split up the balance and give us more of a guidance, we can look at areas within the larger balance profile as well. So these different areas I'll draw them with a blue block. So we can divide this and say, okay, well, you know what? There are about like two more balances within this balance that we could play off of, right? There's an area over here, and then we can draw like a level like this. What I'm doing is I'm just pinpointing the areas that have the heaviest drop-offs in volume between the regions. So you can see volume gets cut off here, right? Very, very aggressively. There's a cutoff over here somewhere, but I'm kind of just putting it alongside with the bottom of that balance area. A level on the S&P 500, if it's like 2 to 3 points apart, that's not necessarily the end of the world. And then this area obviously is a clean drop-off. Over here is a clean drop-off. So those are the auctions and the balances that have the most defined drop-offs. These are going to be levels that we can trade off of. So I have the idea right now. You can see, okay, price is about to open on today's session in and around the ledge of this balance. So the ledge of this balance for me is around 33 to like 35, we can say. So if I want to continue the structural momentum, realistically, what has to happen is prices want to hold in and around this area. If we pull back to continue the leg higher, since everything is leaning a little more to the long side based on the description of this balance, right? We moved back into it from below. So obviously to the top band of the balance, if there's any sell pressure, that's great. We can look for some of that downside move. So what we've done so far is we've created two trade ideas for the day. I either get long this area, or I can sell somewhere close to 55/60 into these highs. So that's it, right? All I've done with just very simple levels is create two opportunities to find trades. Now, we can juice this up a lot more by understanding what imbalanced areas are and what key order flow areas are. So that's something that we're going to take a look at on this delta profile. But before we do that, right, we have these individual sessions that we haven't talked about. Each one of these individual sessions, they have a volume profile. I'm not going to be worried about the market profile right now because I use it in a different sense. But to create a trade plan, I'm not necessarily going to dive too much into that market profile. Instead, I'm going to be focused on where volume is and what the volume looks like. So each individual session has a volume, and this volume is colored. It's colored in a distinct way that creates, in a sense, balances and imbalances. So when we look at the individual sessions, right, we can look at the overnight sessions, the prior day sessions, to give us information for the coming day. So each individual profile, it has coloring from red all the way to blue. Blue being the heaviest volume, which is a percentage in relation to the point of control, right? So the red is the smallest volume, meaning it's 0 to 10% of the point of control's volume. The point of control volume is going to be very blue. It's 100% of the volume. Anything close to blue, green, or blue is very heavy volume. So I'm interested in this. I'm interested in very heavy volume because it shows us imbalance. Now, I'm not interested in very heavy volume at the POC, right? I don't want to see very heavy volume at the POC. But if I see very heavy volume that is not at the point of control, this creates an imbalanced area just as we see here on today's session. So why don't we zoom in on these a little more, right? So if I zoom in on these and we have the same distributions as is, right? So we like this, and we know that the balance distribution, let's make it orange again, the balance distribution is somewhere here like this, right? Great. And then the bottom one is like this. And if I look at these individual sessions over here, right? So I'm looking at volume. You can see this is the point of control, the white line. I'm looking at volume. That is not actually the point of control, but it's very heavy because this brings an imbalance. Consider it this way. If there's a lot of volume trading at a top and it's not going higher, there's most likely going to be traders that are trapped and a potential turning point. Same thing at lows, like over here. There's a lot of volume being traded into this low, and we're not necessarily dropping super heavily, so it becomes an area, especially in conjunction with the distribution area that we had drawn earlier, for a potential move to the upside. So I can look at these areas and pinpoint regions that can be used within the understanding of the larger distribution profile to give me more of a breakdown of directionality and areas that I want to trade. So for example, right, let's split this up again. We'll draw an area somewhere here like this, right? And then we'll draw an area somewhere here like this. Okay, great. So we have heavy volume into this high on this overnight session. It's kind of in the middle of nowhere, right? There's a lot of volume that trades around 55.40. Okay, great. It's not that big of a deal realistically. It's kind of close to this area. So that tells us if we can't fail from this area, there's most likely going to be a continuation to the upside. But it's not really that useful. It's not something very heavy and exaggerated. Now, if I look at something and look at an area that's extremely heavy and exaggerated, right, into some prior days, we can see something from, I'm looking for an overnight session one. I'm not necessarily looking for a day session one, because that's going to help us dictate where there is a clear imbalance where price will want to revert realistically. So if I'm just scrolling along, I don't see anything recently that would spark interest other than down here. So let's take a look at this situation right now based on these profiles. So let's just zoom out a little. What we have in this situation is we have a larger profile, right? We have a profile area over here, and then we have a larger distribution that spans like all the way down, right? Let's just cut it off here. It's not that important. So what's going on in this circumstance is that we've rallied, right? There's been a rally into the higher distribution. You can see where prices are. We've been slowly kind of playing the top band of this distribution, and then this is the overnight session. So the overnight session tries to peek its head into the bottom band distribution, and then it leaves behind the trace of extremely heavy volume close to one of these volume profile ledges. So if I'm looking at this and we close back within the higher distribution, if I look at this from a trade plan perspective, I'm looking at this and seeing right now what we have is the head fake acceptance of a move to the downside distribution, heavy volume traded at the lows, and acceptance back into the higher distribution, putting upside pressure from this exact area around that 5,400 to see if we can spring back higher. So that's how I use these individual days. Now, if I look at the current market right now, we've just been trading in balance. So I just want to play that balance. Nothing more to it. The overnight sessions aren't presenting any kind of crazy opportunities until we open outside of one of these larger areas. So today we were looking for the long side as well, but from where, right? If we create a plan from today's session, if we create a plan from the last few sessions, right? Bottom band of the distribution, top band somewhere here, area right here, area right here somewhere, right? Another area over here. So we look at today's session just based on these volume profiles. I understand that we are in this balance, right? We're coming from the bottom band of the balance. So I would like to see some upside pressure. Now, if we get into the top band of that balance where price wants to remain within balance, that means that I'd expect to see maybe some people selling from this area. So fine. If I'm looking for the long side, I want to understand where these minor little distributions are. So if we're actually playing higher highs and higher lows to create that move into the top band of that balance, I would like to see this distribution area hold a support structure, right? So originally off the morning session, I want to see pullbacks into this 33, 35 so we can continue higher. The morning session rallies immediately back into these tops. That's still fine. because we said that our plan involves sell pressure into those highs, right? Eventually, both sides of the plan work out. So if I go from a day-to-day basis, I can create plans on any given day just using these simple principles. Now, there's something else to add. The other aspect to this is going to be delta. Now, what is delta first and foremost? Delta is a difference between at the ask traders and at the bid traders, market buyers minus market sellers, and they create imbalances. This is very important because these large imbalanced moves are the strong-handed market participants that create those large expansions up or down in prices, things that we want to remember realistically. Because when we have these very important inflection points based on delta, they're still valid for days in the future, right? As long as we understand where these massive delta areas were created, we understand that prices were imbalanced at those regions that allow us to find large inflection points and these delta imbalances. So what I'm looking at here is large, expansive delta that is clustered and that is more exaggerated than any other area. So clustered delta is what I'm looking at. Now, typically on the S&P 500, if you have delta that like spans around 1,000 plus, that's going to be great. But here we have delta profiles. So I'm looking at areas that create large clusterings of delta to tell me that these are very strong regions of imbalances for trades to play against, right? So generally speaking, the red delta is at the bid traders minus, or it's heavier at the bid traders, meaning that there's more people going into the market on the sell side than the buy side, creating these large clusters. So if I see a lot of negative delta clustered into lows, right, that tells me that we're supporting the bottom band of this distribution for that progression to the upside. Now, there are situations where delta, sell delta, negative delta, red delta, call it what you will, gets traded into highs of these moves, right? And this, of course, is going to be a resistance point. It's the same thing with blue delta into highs. It tells me that there are a lot of people at the ask trading that are most likely going to fail realistically. And then, right, if I'm looking at where these areas of imbalance are, I'm trying to pinpoint the largest clusters that are in confluence with the key ledges so I can add it to my trade plan analysis. Because most likely you're going to find imbalanced regions, large deltas at those ledges. That's where traders get the most active to create these larger turning point moves. So if I'm looking at this, right, I'm very interested, for example, into this clustering and this clustering of very expansive, more obvious delta, right? Let's zoom in because it might be a little harder to see. So I'm looking at these delta areas, right? And obviously we have clusters of all this positive delta, but we also have clusters of all this negative delta, 2 sessions in a row, right down at about 55.20, 55.22. So that's very important because the bottom band of the larger distribution. That tells me that there was attempted sell pressure into lows, and we failed to close below, and prices rallied off those levels. So I know that this is a distinctive area where I could look for that continuation to the long side. And I also know that if we break through this area aggressively and accept lower, those are areas that I could look for that sell side. Now, what I'm doing with these deltas and these key imbalanced regions is that either rather than not have traded yet, right? So for example, this area hasn't traded on this day because we haven't opened this day yet. But once it does, it's a very, very strong region. Now, obviously, the confluence and the multitude of delta that trades into a specific area really adds emphasis to it. But look at this, for example. We have this big clustering of delta over here, right? The top band into the top band of this distribution high, right? We get a lot of buying pressure that tries to come in, and we fail miserably. The same thing on the next day happens. Fail miserably. So I can use these massive delta areas as confluence for regions where I want to play off of, because I know that there's a lot of imbalanced trading that happens in and around those areas. So for example, right, I see a lot of negative delta at 2 areas today on this day session. So I know that realistically, this one is at a important area around that like 33 region into this distribution ledge. It's a bit lower, but like fair enough. I know that on the overnight session, as long as we come in and we fail a few times, it's going to try to send us a little higher. But then we have this big guy here at 40 that kind of gets in the way. So I want to keep tabs on that as well. I want to keep tabs on both these because these are going to be very, very large imbalanced areas. But if I'm using the information from the last few days and from the overnight, I can see over here that there's a lot of clustering of blue delta that shapes up right around this 33 area, 32. So if price is above it and we've accepted this distribution, becomes a minor area for me to pull back into to see if I can swing to the upside realistically, right? And that area held at one point today. We managed to make a move into, right, the area that got a lot of people trapped into yesterday's market movement. So when I try to make my trade plan, I want to understand if there are areas that are close to the large distributions that I'm interested in for me to identify large imbalances that can create some kind of directional movement. So this is how I pinpoint those imbalance levels that I can trade off of with expectations that prices are going to hold or reject those regions. We can use these like time and time again realistically. You see this area right here, this large profile. There's a blip of nothing, no imbalance, and all of a sudden someone sticks their head out right at 55.12, right? Someone sticks their head out right at 55.12 and made this massive move up. And you can see the clustering of delta that sits at this like 42.44, which happened to be strong bottoms before we rallied. So these are massive imbalanced areas that for me, if I can pinpoint where these are, it's kind of a no-brainer area that I want to trade off. So this 12, remember this 12 area, 55.12, right? What is 55.12? The low band of these moves before we made stronger rallies, right? Surprise, surprise. So it's very important to identify where these imbalanced regions are because they pretty much just give you a trade level, an area that you could trade off of. So based on these three concepts, these three figures, these three charts, we can identify how we can create a trade plan on a day-to-day basis. And you can use these same principles if you're looking at the market at any random point in the day. So let's review it. First and foremost, my 100-day profile. I gather the information of my large balances and auctions on this. Now, obviously, within the auctions, there might be levels. I understand that from this larger profile, I want to know if prices are inside of balance or outside of balance. Are we here or are we here? If we're here, we want to remain here, and we ask ourselves, how did we get here? From the lows or from the highs to give us some kind of directionality. After that, right, we want to identify where the midpoint areas are and where the key distribution levels are, because those are the areas that we're going to want to trade realistically. Right? We want to trade extremes because these big drop-offs in volume are the extremes that the large, heavy-handed market participants trade that create delta and order flow imbalances from those areas that create large, expansive moves, right? That's the idea. So if I break it down, right, this is our distribution. There's two levels within here, right? And I want to know, are we inside or outside? How do we get there? From above, I want to put some downside pressure. From below, I want to put some upside pressure. But I also know that prices want to stay within balances. So if we trade the tops or the bottoms of these moves, I know that there's potentially a trade there. The whole point of the trade plan is to identify the areas we're going to trade and what kind of trades we're going to take there. The next thing I'm going to do is understand on the overnight, is there some kind of a potential heavy volume based on some green or blue at a top or a bottom to help me understand if there's going to be any kind of turning point? In this case, so far, there isn't anything, right? There isn't. It's just we're trading a massive balance so far. And then the last thing I'm going to do is I'm going to try to sniff out where big clusters of delta are at the key extremes to give me some kind of indication of if I should be leaning on the long side or the sell side. So into the end of the overnight session yesterday, we had very heavy negative delta into lows at the bottom of this distribution, telling me I want to be long into prices, right? With all the heavy delta into the highs of this distribution and the continuation of the creation on today's session, it tells me I want to be short from that area. So these three specific things, right, can help me every day. And this is what I do. This is what I paste in Zoom. This is what I paste in Discord and talk about in Zoom. This is the exact creation thought process that goes into every single day of creating a trade plan. So that's all I have to do. And I can get my trade levels, what direction I want to trade, right? And what kind of trades, longs or short, at what area, right? And we also have to know that if we break balances, what happens? The direction breaks and things change. So if I have this balance right here, and I want to be long from the lows, and I don't want to continue prices higher, right? I want to, because we've accepted back in from below, I want to stay on the long side. However, right, if we accept into a distribution lower, I don't necessarily have a choice but to start looking for short side plans, right? Or if we move above, I want to be very directional to the longs, right? It's simple in that sense. So this wraps it up. This is the whole creation of the trade plan, step by step, how I do it on the S&P 500 futures. You can look at it on the NASDAQ. You can look at it on any futures. I might do some videos on the NASDAQ one because it's going to take another 30 minutes to do that. So I hope you guys enjoyed, and we'll do it again next time.